Hey, it's Crystal Johnson here with the AJ team, and I have my trusty,
Husband,
loyal
hello,
business partner,
business partner.
all of the above.
Notice I said husband first
He did.
before all those things.
He did.
There we go.
He's been trained well.
That's right. Alan Johnson with the AJ team. And today we're going to talk about something really important. So we really need your attention. It's so important that we wrote notes, right? So we want to talk about what we think is the biggest opportunity in real estate that we've seen in probably about 5 years.
Yeah, absolutely. And, it's not one of those things that are new. They're not new by any stretch of the imagination. However, in the market that we are in the interest rate environment that we're in, it's come back around and it's essential that real estate professionals like us educate you on knowing the opportunities that are available. And so we're going to talk about assumable mortgages.
Assumable mortgages. And this is not the first video we've done about this. We've been doing this for the past 6 months because some of y'all don't listen, right?
So it's actually probably been a little longer than that. I feel like we started this a year ago.
About a year ago, yeah. I'm really big on studying the trends and trying to make sure y'all know where the market's going instead of where the market is. I think everyone, all y'all know someone who has a real estate license. You might have a real estate license or have had a real estate license.
Yeah.
But there's this distinct difference between having a real estate license and being a real estate professional.
Yeah.
Right.
Practitioner.
Practitioner.
Day to day in the operation room, right?
So we're gonna go over this is gonna be quick. So because we're gonna want you guys to call us to talk a little bit more about this if you line up with this. So I'm gonna give you some numbers and then Crystal's gonna go over 4 things our buyers are doing to prepare for the opportunity of an assumable mortgage. So we just had a client close and they saved more in interest over the life of the loan than the cost of the home they purchased. Let me let that sink in.
I love it. Let it sink in.
Right. We had a client close that saved more in interest over the life of the loan than the cost of the home that they purchased. So the home that they purchased was $900,000, right? And the interest that they would save over the life of the loan was right at $900,000.
Yeah.
Right. So this is really a big financial opportunity for those. All right. Number 2, there have only been three assumptions done in the county. And we, the AJ team, have done 2 of those and have another under contract. So we're not teaching you guys anything that we are not actively doing. And it just speaks to other agents just are not able to get these things done.
Yeah. And taking advantage of these types of opportunities is where experience truly, truly matters, right? So, it would be one thing for us to get on here and say, hey guys, let me tell you about this great thing called assumable mortgages. And then we never really experienced doing them, right? Because they're not easy, right? By any stretch of the imagination. However, since we've had the opportunity to actually help clients through this process, show them how to get through the process, we know how to manage it and make sure it happens and it's going to be successful, right? So when we're talking to you about assumable mortgage, just know we're talking about it from a position of actively working through these on a day-to-day basis with clients who are interested in taking advantage of the opportunity.
Yeah. Right. So our buyers recently, they assumed a 2.7% interest rate, 2.75, 3.25% interest rate, and a 4.5% interest rate. And here's the kicker with these assumable mortgages, they weren't a 30-year mortgage. They had already been paid down. So I think one was 27 years, 25 years, and 26 years.
Yeah.
So when you start to add up the value of not having to pay an extra 4 years, extra 3 years, or extra 5 years of mortgage, that's where that stuff starts to really be awesome.
Yeah. So when you're assuming a mortgage that is already existing, just keep in mind that you get all the terms.
Yeah.
So wherever the terms are on that mortgage loan at the time that you make the assumption, that becomes your new mortgage term. So the number of years that are left, the interest rate that is on there, the actual monthly payment amount, barring, taxes and insurance changing, right? That stuff is the same. It's locked into place.
Right. And this can be for people who are upsizing, downsizing. It's really an opportunity. So I want to highlight people who have VA eligibility. So any veterans or currently serving. Salute to all y'all first and foremost.
Great service.
This is a great opportunity for you guys. And you can also assume an FHA mortgage. So buyers who have VA eligibility, reach out to us, right? And then also people who have purchased the house and have used the FHA loan or a VA loan to purchase that house in the past, reach out to us because there's some opportunities that you can unlock some more equity in your home when you go to sell it if we market those types of things.
Yep.
All right, so Crystal, real quick before we let everyone get back to their wonderful day, what are a couple of things that our buyers, like these are buyers that have done it, are doing to prepare themselves for these opportunities?
First and foremost, they're sitting down for a strategy session early, right? So they know that they are wanting to purchase a home. They have heard us talk about assumable mortgages, and so they are getting themselves prepared early. So the first thing they're doing is they're getting themselves ready early to sell their existing home. So many of the buyers that we've helped so far with assumable mortgages, they were selling their current home to move up into a new home, right? So they started the process of preparing their home for the sale as early as possible to have that be a part of our negotiating tactics when it comes to getting them under contract on that assumable, right? That's one of the first things they're doing. The second thing is that when you have an assumable mortgage opportunity that you want to get into, there is going to be some cash that you need to bring to the table to get to that closing, right? So let me give you an example. Let's just say that there is a property we identified that has an assumable mortgage, and that mortgage balance is $600,000. However, the sales price or the market value of that home is $850,000. Well, we know that there's a delta between what they owe on that mortgage and what the sales price of that home may be, which is at 850 or 800. So there is going to be a difference of about $250,000 that they need to bring to the table, right? So where are they going to source those funds? Part of getting prepared early is understanding exactly where you're going to get that money from. So they're doing it two ways. One, they're looking into their retirement accounts, whether that be a TSP or 401k or any of their stock market accounts that they maybe can borrow against. But the best way to do that, right, to get that funds ready, if your equity is not released yet, is to go get a HELOC, right? So they're preparing themselves by applying for a HELOC so that they can leverage the equity in their existing property to be able to close on that assumable mortgage. Okay. I know that was a lot, so that's why you're going to call us anyway, but we'll unpack that for you so you can have a better opportunity to be prepared.
Right. Okay? And the reason why this, and I'll let you get to the last thing before we get out of here. The reason why these you have to prepare is because these opportunities come really quick, and there are not many of them. Yeah. Keep in mind, out of, I believe there were like 515 homes sold in Prince William County. There were only 3 of these done. Right. So
all year.
Yeah, all year. Right. So when the opportunity comes, you have to be like uber prepared.
Yeah. Yeah. And then the last thing that they do to get prepared is that they make sure that they can get approved for a FHA or VA loan, right? You want to make sure that you can get approved because those are the ones that are assumable. So you want to make sure that that pre-approval is in place and you're prepared to take on the assumable opportunity.
Right. Okay? And keep in mind, you don't want to call the lender and say, hey, I need to be approved for a VA or FHA loan, and I'm probably going to assume a mortgage, because the deal with assumable mortgages is you can't go through your own lender. You have to go through the seller's lender.
Yeah. Whoever's holding the mortgage, those are the people who are going to get you approved for that loan.
Right. But part of your offer is we've got like, hey, Crystal is already approved for a VA loan. She's approved for this much. So this shows the seller that you're going to be approved to assume, likely approved to assume their mortgage as well. And then last but not least, sellers, if you have a FHA or you have a VA loan and you're thinking about selling, you need to call us. Yeah. Like if it is packaged properly, you can get more money for your property. Now, the delta that Crystal talked about needs to be really close. So the loan amount, the closer the loan amount to the actual sales price, the more marketable and the more valuable your loan is, as long as it has a lower interest rate.
Yeah.
Right. So that's where you got a VA loan and you owe $200,000 on it, but you're selling a property that's $800,000. That's not as marketable.
That's a reach.
Right.
That's a long reach.
That's a lot of money they got to bring. But let's say you have a property that we're going to sell for $750 and your mortgage is $500. Right. Now that's something that's a lot more marketable to people. So we're excited about this opportunity. That's why we keep beating y'all in the head with it, right? Until y'all get it, right? Because I'm telling you, like, these are great opportunities.
Yeah. And listen, if I could have bought this house, if the builder had an assumable mortgage on this house, we would have been in. Okay. I can tell you that right now. So with that being said, If you want to learn more, if you want to get a little bit deeper into an opportunity to take advantage of an assumable opportunity or mortgage, give us a call. You can reach us at 571-210-1818, 571-210-1818. Or you can reach out to us via a web. You can fill out a form, which is basically referajt.com, referajt.com, and we'll get that information and we'll reach out to you to get you scheduled on the calendar, okay?
And look, guys, and don't be greedy with this information. Like, if you know someone who is VA eligible, or someone even in a different part of the country who needs this type of information, connect them with us. We can connect them with a real estate agent that understands the nuances of these anywhere in the country.
Yeah.
And then if you know someone, a neighbor, a friend, someone at your where you worship, someone that's in your sphere of influence who might get a blessing for something like this, I'm telling you, they would appreciate you for the rest of their life if you connected us, right?
Yeah, absolutely. Absolutely. So you guys know what to do. You have the dream.
We have the address.
See you next time.
See you soon.